Hello, this is George, and this is an introductory video to my new software that I've developed for TradeStation and EasyLanguage. It is called the Zone Trader Framework or Zone Trader Analysis Framework. I haven't really come up with a name with a complete name. We may just go with Zone Trader Framework. But it's used so that you can easily design day trading systems, and it's important. This is designed solely for day trading of the stock indices or any market, as long as there's enough volatility. And what it does is it allows you to overlay the daily market action with predefined zones that are derived from prior day's action. One of the most famous zone overlay is the Camarilla. And that is part of this framework. I will include that and how you can actually execute trades at specific zones and how you can enter and exit. I'm going to show you one, how you can enter a specific zone and get out of a specific zone in this video. Now, this zone, as you can see in front of you, there's 4 zones. I label them Zone 1, Zone 2, Zone 3, and Zone 4. But there's really 6 zones. You got Zone 0, and that's just above Zone 1, and you have Zone 5, which is below Zone 4. And each of these zones have boundaries. This is Zone 1 top, Zone 2 top, or Zone 1 bottom, Zone 3 top, Zone 4 top, and Zone 4 bottom. And I've created a nomenclature that makes it easy to go in there and program trades based on the crossing of these zone boundaries. And why would you be interested in trading when the boundaries are crossed? Well, most day trading systems over the years had basically 2 components. They had a breakout component. The market basically opens up and goes in one direction. Either up or down, and that's called a breakout trade. And a lot of times you have those what we call breakout trend days, where you have very little deviation from that trend. You don't have any pullback, and those are great days, but they happen infrequently. But you have to be available to be able to take action on those types of days, so you can make some really good money. But most of the time, the market is in a congestion phase, and when you overlay zones on this market action, you can see how the markets go up and then come back down, and they can have breakouts, but then they can have fake breakouts or false breakouts, and that's what usually happens. You have a breakout to the upside that stalls and then pulls back. Now you can take advantage of this fact. Like I said, most of the time the market is in a congestive phase, especially on a day trade basis. And what we're looking at right now are 5-minute bars on the ES.D, which is just the day session. And in front of you, you can see how the market opened in what I call Zone 2, and it traveled and it started getting some type of buying activity, and it drove the price up, and we penetrated Zone 1 bottom or Zone 2 top. Zone 1 bottom and Zone 2 top are basically the same. So let's just stick with Zone 2 top. We made it above Zone 2 top. We crossed it. There was a crossing of the close, and that's what I look at in the basic Zone Trader framework. Of course, you could change that close to a high if you consider the high as a penetration, or if you consider the close as the penetration point. I'm considering the close here. So we have a close above Zone 2 top, and then it goes up on into Zone 1, but not with much gusto. The market immediately turns around, and this is what I call a kind of a counter trend trade. It meanders and meanders, and it starts moving down. And you're thinking, hey, okay, this is a reversal point. This pivot point was a reversal. But then the market starts rallying back up, and you're thinking, okay, we've had congestion or consolidation. We're going to break out. But again, we go into Zone 1, but not with a lot of momentum. And then we have this huge sell-off, and the market just collapses the rest of the day. It gets down to the top of Zone 4 and then bounces. So what I like to do is to develop day trading systems, and I have developed many day trading systems over time that use the counter trend mechanism. There are several very famous systems by Richard Seidenberg, R breakers and R levels, and also Mike Barna, R Mesa, as with Ehlers, which took the Seidenberg approach but used the Mesa cycles analysis as an overlay. And there's just been a lot of very famous trading systems, day trading systems out there that utilize this type of mechanism. The zones I'm using, and I call this a midpoint zone that has the midpoint of yesterday. That's what the yellow line is. I have my resistance level 1 and resistance level 2. I have my support level 1 and my support level 2. And the beauty of the Zone Trader framework is you can go into the code. Let's go to the strategies, into the input section, and define your zones there if you like. You don't have to, but I've provided a template so that you can just go ahead and program with EasyLanguage the different zone levels. Like for example, here's zone 1 top formula, and that's basically high D1. High D is, if you don't know, is how TradeStation keeps track of daily bars when you're utilizing intraday data. So high D with a subscript of 1 says yesterday's high plus yesterday's high minus yesterday's high plus the low of D1, yesterday's low, divide by 2. So basically what you're doing is you're taking the high of the day and you're adding high of yesterday, and you're adding the high of yesterday minus basically the midpoint. So the high of the day minus the midpoint plus the high of the day gives you resistance level 2. Now, if we want to go to zone, I think it's zone 2 bottom, it's basically the midpoint, okay, or zone 3 top. Is the high of the day of yesterday plus the low of the day of yesterday divided by 2. That's basically the midpoint of yesterday. So all these resistance and support levels key off of the midpoint. And I do have a zone 1 and zone 1 top and zone 1 bottom. Now the only thing that separates the zone bottoms from the subsequent zone tops is 1 tick, and that's the mid move plus a price scale. And I did that so that if you had a limit order working and you wanted to get that 1 tick or exceed that 1 tick, you would have that data available to you. It's not necessary. I don't plot the bottoms in the indicators that do come along with the Zone Trader analysis framework. But if you do want to incorporate them, you can. By not incorporating the bottoms, I just cut down on the drawing on the screen. It makes it a little bit more cleaner looking. So basically, this is what I call the midpoint derived support and resistance levels, and this is included in the Zone Trader framework. I also include the Camarilla levels in the Zone Trader framework, but I wanted to really quickly today show you how you can use the nomenclature that I've already pre-programmed for you. I've done a lot of the work for you and a lot of the bookkeeping that goes along with that to determine where the price is currently, which zone it's in, what the zones that have been crossed thus far in the day, and you can incorporate that into a trading strategy and develop your own zone trading system, zone day traders. And you can use profit objectives and risk amounts. Right now I'm using a wide profit objective because I want to show you how to utilize the nomenclature of the Zone Trader framework without having to get involved with the profit objective or the risk amount. You could set these numbers very high, or if you don't want to use them, or if you do want to use them, just set them to an appropriate amount that you'd like to use. I also have a stop entry time. I don't want to take any trades after 3 o'clock Eastern time. And I have a range filter, and you can incorporate that into your analysis, saying, okay, I only want to trade when the prior day's range was less than 1.25 times the 10-day average range. I have that in there too because that, you know, kind of falls in line with Toby Crable's NR days, which seem to over time, you know, provide a good bounce the following day that you could take advantage of if you do observe an NR day. So let's go ahead and get started on this. Like I said, this is the Zone Trader Framework. These are the inputs, and these are the levels that you can just go into the inputs and modify if you like. I've also included a version that does not have the zone level definitions in the inputs. They're basically in the EasyLanguage code themselves, so you can do it that way as well. So let's go ahead and play around with this a little bit. A lot of times it's really nice just to sit and go through a bunch of days and see how the market interacts with these zones and the crossings of these zones. And I found this day, and I just wanted to see this pattern. I wanted to take this trade, and once you program it, you can test it over you know, a bunch of history and see if it has any merit, or if it's a one-time event or a 3 or 4 or 5 time event. Does it make money? And in this case, what I want to do is I want to test when the market opens in zone 2. As you can tell, the market opens in zone 2, right there, zone 2. The indicator that draws the lines and puts the text labels zone 1, 2, 3, 4, and in case of the Camarilla, zone 1, 2, 3, 4, 5, 6, is included with the framework. Those indicators are included with the price of the framework. The framework is going to probably be $39. I like to create these frameworks not to sell systems, but to provide a tool so that the user can go in there and learn the EasyLanguage that's involved with the framework, because you can learn a ton, but also utilize the framework to develop your own day trading systems, things that you might use, or tools that you might use, or some research that you might use. You may not even have an automated trading system. You might just want to see what the results or observations are of these zone crossings. But for really quick test, I want to test this idea, this pattern or sequence. I call this a sequence, a zone crossing sequence. I want the market to open in zone 2, and I want it to go ahead and cross above zone 2 top, and then I want it to come right back into zone 2, because I'm saying, okay, we've opened in zone 2. I've had enough impetus to carry me up to zone 1, but it can't seem to cross it. It can't, and it is getting a lot of resistance there, and you can tell there is a lot of resistance there. Now, and then I want to sell it when it comes back into zone 2, and then I want to take, you know, either use a stop loss if it keeps going, which it does quite often, or I want to take a profit somewhere down here, or I just want to get out at the end of the day. Right now, it's a day trading system, so all entries are exited at the end of the day. So let's program this real quick. I'm going to shrink this back up so we can get the TradeStation editor in play here. Hope you can see all that. I'm going to scroll this over here. So as a reminder, I want to go ahead and basically I'm going to sell right here. Okay, that's where I'd like to sell. Okay, as the market comes back into the zone 2. So here's the nomenclature that we're going to use, and I'm going to type this. The nomenclature will become more self-evident. I can copy and paste it, but if I type it and I can discuss it as I type it, then it may be understood a little bit better. Okay, if day open zone, and this is a variable I created, is equal to, and these are strings, which mean they need to be included in quotation marks. If day open zone Z2, zone 2, and here's another variable I created. This is the nomenclature I was talking about. Last 2, I got autocomplete on, so it takes a couple of seconds to start typing. What I'm going to do is I'm going to turn that off. So bear with me for one moment. So what I did, I turned off autocomplete so it will type without hesitation. If the last 2 lev And that's basically the last two crossings. And we did have two crossings. We had a cross through zone 2 top and then a cross back down below zone 2 top. Last two lev equals, and these are strings. And this is the nomenclature you would have to learn. And of course, all this nomenclature is completely described in the manual. I'm going to go zone 2 top, cross above, zone 2. If you look at the wording or the letters, it's kind of an abbreviation. It kind of makes sense. Zone 2 top, cross above, CA cross above. And here you got to always put a comma between the different crossings. It's just something in the code I had to do. And then it goes back below zone 2 top, cross below, comma. Don't forget the comma. Always forget that last comma. Okay. So if today's open is in zone 2 and the last two levels crossings, last two level crossings or last two levels is a zone 2 top cross above and a zone 2 top cross below, and I have not shorted anything today, and my shorts today is equal to 0. Basically, it's the first short of the day. Then, what do I want to do? I want to go ahead and say I want to sell short. And you got to give it a good name, and I'll explain to you why you want to give it a good name. This is going to be called zone 2. Let's see, short on a pullback. Okay, market went up, came back down. I'm still on short on the pullback. It's a pretty descriptive name for that entry. Next bar to open. Okay, you could use stops if you like, but for this framework, it's best to use opens, because if you use opens, then you know that that has occurred, and you can check a lot of stuff off. You can check off if you've had a particular buy or sell in that particular zone. Now, this framework is not necessarily designed to trade. It's basically designed to help you develop your research and see if you can find something that works, and then maybe take that into and put that into an actual automated trading system. It'll be up to you. So I'm going to sell that next bar, zone 2 short pullback, next bar at open. And we know that's happened. We know we're going to sell because it's a market order, so it's automatic. So then I've got this zone 2, I got this zone array, and I'm going to tell it to say, okay, zone 2 short, that means I've gone short in zone 2, is equal to zone array. And this is just an accumulator. This basically is saying, hey, you know, I'm going to add a 1 to that, just to keep track of how many times I've shorted in zone 2. And so it's good to always do that, because in the long run you will want to know how many entries you've gone into each particular zone at the end of the day, if you were doing multiple entries or multiple filters. So what do we do? Is that it? Yeah, that's it. So we're done. So hopefully, if I've coded this properly, you're going to see a sell short right here. Before I do that, I just saw that I forgot to put my begin here. Sorry about that. Multiple statements in an if-then construct needs a begin and an end. Okay, I verified that, and lo and behold, there's our zone 2 short on a pullback. Pullback from this initial impetus up, started down, and we get out at the end of the day. Nice trade there. Now, does that mean that's going to happen all the time? That's up to you. That's just one sequence that I wanted to program, and as you can say, it worked here. I validated or verified that sequence worked as the way I wanted it programmed. Now, it's up to you to go back and test it over 5-10 years of history to see if that type of sequence is profitable over the long run. Okay, now this is great. I can set my profit objective, as you saw in the inputs. I can do a stop loss, which I think you should always have a stop loss in there. But what if I want to program getting out on a limit order at the top of zone 4? Okay, I want to short this zone 2 short pullback, but then I want to cover this short, this specific short, this exact sequence. I want to cover that with a limit order at zone 4 top. How do I do that? And this is where naming that that signal properly comes in real handy. This is very simple. So what we're going to do, I'll go ahead and program it. Let's do it right here under our entry. If MP, which is market position, which is a variable I created, is equal to -1, then, and I'm just going ahead and put a begin here. I don't have to because I'm only going to do one statement here, but sometimes it looks good to see the indentations and how things are controlled. I'm going to say, I'm going to buy to cover. Remember, buy to cover is to exit a short position. And what are you going to do? I'm going to call this, and I want to keep the same naming pattern. So pullback, short pullback, I should say. Profit, P. P is for profit, L is for loss. I want to do that where? I want to do that next bar at, well, what is that? That is Z4, and this is the nomenclature that you'll get when you buy the manual. All this nomenclature will be in there for you. I want to get out on a limit order at Z4 top on a limit. And I'm just going to make sure that that Z4 top variable is the right variable name. I got a lot of variable names in this framework. Bear with me one second. I'm going to pause you, but you won't be able to tell. Okay, yeah, I wanted to make sure I had the right variable name. Z4 top is equal to zone 4 top formula. And remember that formula was derived in the input section. So we are using the right variable name. So let's go back to the code here. And you can tell there's a lot of code in here. So it's a very large framework. You just got to get in the right section and program your code appropriately. And I give you a lot of examples on how to do a lot of different zone crossings. So that's it, right? So we did MP equals -1, then begin, buy to cover, zone 2, short, pullback on a profit, next bar at Z4 top limit. So hopefully when I compile this or verify it, you'll notice we'll be getting out here. That's zone 4 top. Calculating the analysis techniques and strategies. I've got quite a bit of history here, so it does take a little bit of time. It should be any moment now. Okay, there it did. It flipped it. And it did get out where we wanted to get out. We entered on the zone 2 short pullback, and we covered it at zone 2 short pullback profit, and that is zone 4 top. Okay, so that was all there. That's all the code it required for us to monitor that sequencing. Zone 0 opening, zone 2 opening, crossing zone 2 top above, crossing zone 2 top from below, not from below, but above it and below it, and then taking a profit at the zone 4T. Okay, that was just an introductory into the Zone Trader framework. Like I said, I will release this software probably in the next couple of days. Just check georgepruitt.com and or this YouTube channel. I will probably announce it on there with another video. Thank you.